Now, our guest this hour is Sean Darby, Chief Asia and Emerging Markets Strategist at Nomura International in Hong Kong. Sean, since we're talking about Rio, let's talk about the Aussie first. The Aussie dollar, well, it's been dropping on the collapse deal with Chinalco, but currently, I think, recovering slightly. Do you see hedges being unwound?
Well, I'm not really too much of an expert on the Aussie dollar, but one of the things that our FX team have been pointing out, that those currencies that tend to print money, or the central banks that tend to print money, will underperform. Australia stands out as being one of those, in contrast to the US and the UK, which hasn't done so. On that basis, it would presumably still be one of the more favoured exchange rates. Again, the key thing we tend to look at from an equity point of view is the terms of trade within the Asian region. That's the ratio of export prices to input prices, and with a rally in the commodity markets, countries like the ASEAN and Australia would tend to stand out as being more favourable than those in North Asia at the moment.
It's not just ASEAN, but Asian currencies as a whole have been strengthening. Is there a sense perhaps we could have gotten ahead of ourselves in the recovery story, and currencies here could see a correction?
Well, I think that's more likely to be sort of a 2010 phenomena. I think at the moment there was a great deal of capital outflows from the Asian and emerging market regions at the end of last year, really on panic selling. And I think what we've seen at the moment is a very sharp improvement in the current account surpluses through the region, alongside capital repatriation, both by foreign investors and, of course, by some of the domestic institutions putting back money onshore again. So it's been a combination of factors which have caused some of the exchange rates to overshoot in the short term. But I think the sort of growth questions will probably come through in 2010, and that may be where we'll start to see some of the unwinding of some of the on the exchange rates, as well as sort of perhaps some of the expectations on equity prices as well.
Sean, which are the must-have currencies for 2009?
Well, we've tended to sort of favour a still resilient Chinese currency versus the dollar. So we've got still a basket of shares that benefit from a strengthening yuan. So we've got companies like the toll roads in that basket. We've also favoured the Hong Kong dollar in terms of buying asset reflation themes. So we've owned some of the property stocks in Hong Kong and also in Macau as well. So those exchange rates which are very fixed to the dollar, and where they have very little room in terms of altering their exchange rate, and therefore allowing the balance of payments to expand, will tend to see asset prices rise the most. So Hong Kong and China will probably be the two standout cases.
Okay, talking about Hong Kong, I mean, there's a question here from our viewer, Stan, who wants to know the outlook for the Hong Kong dollar if you take a short and long-term view.
Well, we don't see any real changes in the short term to the Hong Kong dollar. Longer term, this all really reflects around ultimately capital convertibility on the renminbi, and to the effects that the dollar has to make some adjustment in terms of its economic fundamentals. From what we can see, that there's still a very much a trend in terms of relaxation of capital controls, and news, I think, overnight on Standard Chartered and HSBC all wishing to issue yuan bonds is an indication that we're along that road at the moment. So, again, the best way at the moment in terms of playing this theme is through the asset markets, and Hong Kong listed property shares stand out as the best beneficiaries.
Sean, in 20 seconds, UBS says the dollar is trading too low against the euro, given what it calls a recovery in the U.S. private sector economy. You think?
Our own basis of judgment at the moment is we're still in the sort of camp that the dollar still needs to make a weakening phase, and that really reflects around the fact that Asian assets will still be in favour.
Okay, Sean Darby, Nomura International. We'll be back with him.